Buyers saw follow through on a break to new all-time highs last week, heading into FOMC meeting next week, where the market is priced in pretty much 100% chance for a rate cut. So, will it be a sell the news event, and what do buyers need to get done to stay constructive if it is a sell the news event? My name is Lamont, full-time trader, part of the Chart Guys team, where I head up our futures room in the swing report. In this video, we'll cover all of that and more. So let's get into it. Okay, so starting off with SPY. So, recall the last few times the market has broken to new highs, it kind of struggled to hold on to the gains. And we were talking about how that was a bit problematic. This breakout over here falling back into range, this breakout over here falling back into range. And last week we ended over here, right? This was the Friday, and it looked like it was going to be another situation where we're going to fall back into range. And what the sellers had to get done, I believe we discussed last week, was they needed to hold back under this breakout point, right? Because that's how a breakout gets negated, right? Just like back over here, when we saw this breakout, it was only problematic once you fall back under 646.19. Over here, over these 2 days when there was a battle for it, it was questionable whether or not we would see another situation as such. But we didn't. These buyers saw a good amount of follow through now, and now there's a lot of space for a potential higher low. The new breakout point is 652.21. And so on Wednesday, even if let's say like the market gets the worst news, right? The market has been super focused right now on rate cuts, so it's pricing at 100% chance of at least a 25 basis point cut next Wednesday. So let's say the worst case scenario happens for market optimism and you don't get the rate cut, right? Jay Powell comes out, a hawk eats his eye, and he just yells, right? And then no, his rate cut's canceled. All right, well, that would not be good. The market would be caught off guard. You'd probably see some hot and heavy selling. And if that's going to be the case, the best case scenario would be to hold over 652.21. There's a decent amount of space, especially if the first half of next week, if these buyers compress a little bit higher, then there's a lot of space to defend against that breakout point. And even if the sellers do negate this breakout from September 10th over the September 5th high, I honestly think that's fine as long as you're holding over this guy, right? So 644.64 is the point of control of this prior all-time high supply over here. There's much more value established here than over here, so I'm not really updating it to this little 4-day balance over here. That would still be constructed, like a bunch of sideways chop over here. It would be very similar to this, right? It would be super similar to this situation, where you break to a new high, come back in, back test this prior all-time high structure, hold it 2 times, creating for this chop above it, and then you break to new highs. So if you were to just repeat this over here, except off of this structure instead of this structure, that's fine for the market. The market would still be okay with that. All right. At this point now as well, I think there's decent space for a weekly higher low. A monthly higher low, of course, is all but guaranteed. Whether or not it's so much retracement that we would also look for a lower high after that, that remains to be seen. But as of right now, lots of space for a monthly higher low. We'll take it one step at a time. All right, so that's pretty much it. I think we got, let's see, we're over the monthly R1 now. I think the monthly R2 is the next objective. The yearly R2 is even higher, I believe. Let me just make sure here. Yeah, yearly R2 is like 700 pretty much. All right. And I think we had some trade zones, right? It's actually channeling quite well, isn't it? I don't really use channels anymore. Give me a second here. I just wanna, like, this is channeling quite well, or even like this, right? Looking at it like this, and then just assuming that price is kind of hanging out near the upper half of this channel. I guess you would have to anchor here to get more pivots anchored on the top here. Yeah, looks pretty. Buyers look pretty healthy here. And I think we have some trade zones, right? We had let's see, I'm getting myself confused here. That's the most recent one. All right, so that one done. This is the ad for this original idea. At this point, I sent the tweet out. You should take your profits, right? It's already beyond the target here. And so for a stop, I think you can walk it up to under here or under here, 643.33, no later than this low, I would say, 634.92. For any remaining position. And, because FOMC is next week, I don't really feel like it would be terribly responsible to create a new zone around here using the same logic. It would make sense, right? If not for some major news event, it would make sense. But because of the FOMC, I think probably best to avoid. But if we were to set up something, it would probably be something like this, right? Because you have these two high volume nodes over here. We're playing up to that monthly R2, right? Yeah, R2. That's probably decent risk to get all the way back up there, even though it's more risk than the prior setups. Something like this, I think, would be quite reasonable. But again, FOMC kind of throws a wrench in that. If you really want to be aggressive, then something along these lines, I think, is a reasonable location for trade. All right, I guess I'll just group it up as well. Why not? So that's it. Moving on to the Qs here. So the Qs now also surpassing the monthly R1. It's the same dealia or similar, right? It's a little bit different than the SPY because it only recently broke to a new all-time high over the August high, whereas SPY, it's way over the August high already. Oops. So more or less the same, right? We still just care primarily about this all-time high structure. So next week, if it's like a sell the news event, what do we want to see? We want to see these buyers ideally just hold over 583.32, right? That's this guy over here. But if they can't get that done, really holding over 580.06 is honestly fine. This is the prior all-time high structure. There's a lot of value established over here. Lots of space for a daily high or low. I don't really care about this dinky one. I would say anything over this low over here, 559.54 will be good for one. Weekly time frame also got space for a higher low. Monthly, of course, tons of space for it as well. And that's really it as well. What did we do trade zones for the Qs? I forget. It was this guy back here. So actually, it hasn't even gotten there. I think what are we looking for here? Was it the yearly level? I think it's the yearly level. No, it must have been a prior monthly level, I guess. Well, it's been updated, so we should probably update that to here. So, objective, I would say, would have been reasonable to just chop it up at the monthly R1 if you use that trades on the second time around or the first time around. I think it popped us by just a smidge. And that's really it. Honestly, even if we were to just hold over this breakout, I still think that would be okay, more or less, right? Because if we move down here, right, take out this point of control, which would then affirm this as supply, but can't negate this breakout, this is really the last major leg here, and just kind of balance over this guy, then we still affirm this breakout, and then we're chipping away at this structure over here. I think that would still be pretty constructive, just not the best case scenarios. They kind of have like a A, B, and C scenario, right? The A scenario, hold over this guy, that would be the most strength. B scenario, this guy. C scenario is this guy, and I think all of those would still be more or less constructive for buyers. I think it's reasonable to buy as long as the daily is in breakout mode, right? So as long as you're seeing a breakout over new highs on the daily, and in this case you're kind of seeing it in two places, arguably three, here and over here, arguably over this one as well, the daily tries to be fine. Okay. That's pretty much it. Moving on to the rut here. So the rut, very notable rejection from the point of control of the all-time high supply. Remember, we've been watching this guy forever. Since 24. This should have a year on it here. Oops. Very notable. However, at the same time, this breakout still being affirmed, right? As long as you're holding over 237.02. And the small caps should benefit the most from a potential rate cut, right? Because they carry the most debt. So that's really it. I care primarily about 237.02 as a downside reference, 240.88 as an upside reference. And even if you were to hold over 234.85 to keep affirming this fella as demand so that we see a battle between this all-time high supply over here and this guy over here, I think that would still also be constructive. So again, best case scenario, like like an ace situation, like the ace support would be 237.02 and the king would be 234.85. All right, so that is really it. Sellers are doing what they have to get done, right? From a defensive perspective, they are holding under the point of control of the all-time high supply. Very, very notable, pretty much a picture-perfect defense of it, but these were also very notable failures, right? The sellers did not get down to the point of control over here, did not get down to the value area high here or here. So we shall see what these sellers and buyers can get done next week. I don't really feel comfortable playing off of this guy. It's so close. and we have FOMC next week, so no trade zone there. Moving on to the Dow. So the Dow took a long time, but finally did get to the target. Hey, is this like this? This is not the right color. I guess we should say this is the new daily no change level now after this breakout. I would say 458.67. As long as acceptance above, well, then obviously we are accepting new prices. I should say the market, not we. The market's accepting higher prices. And we should update it now, right? Because this is a significant amount of local daily demand. So really we should care about this. And as long as the buyers can hold over this point of control, even if they do negate this most recent breakout over 458.67, if they can just hold over 455.56 to keep affirming this, let's call it 455.58, then they would still affirm this local daily demand. And again, this would just be constructive, right? Just like, coming off of this structure here, demand, breakout, demand, breakout, demand, breakout, everything is fine here. Like this was honestly quite problematic, right? It looked problematic. You had this overhead supply, you take out this demand. I guess you could perceive all this as one block. So then, you wouldn't have been so concerned here because you don't take out demand after building supply. But right now they look fine. All right, so 455.58 is our super key reference next week. Moving on to the dollar. So, sometimes trades just make you work, right? Like, or make you wait, I should say, right? I still stand by it. Finally, it gets to our target here. And why did we target here and not the value area low? Value area high of this key demand zone over here was because we already had a low here. You already had a low secured here. You had a low secured over here. So I was thinking if you're going to be a seller off of this structure, it does make sense to look for extended targets into this key demand zone over here. But I think for like your first profit taking, makes more sense to kind of like look for an exit above these lows over here, because if these buyers are going to play defense on the way down to there, it should be here. So we'll see. As of right now, finally it took us forever, month and a half to get all the way down here, but at this point now, should wait no later to be chopping up your position. If you do chop up your position here, you didn't take any profits in here, you can leave your stop over here. If you're not taking profits on this and you sold in this zone, then your stop can be here, right? Because no sense in letting that go red, really. All right, and I stand by the buy zone as well. Again, we're just looking for further balance. The dollar just has a propensity to balance for a long time. It's traded against 6 other currencies. So there's a lot of fluctuation between those currencies, and that's why you see just a bunch of chop, right? So responsive trade on the dollar is very often the ticket. Okay. All right, so that's it for the dollar. Moving on to gold. So gold looks totally fine. Super healthy consolidation, high and tight, potential bull flag right now. Even if this bull flag fails and you roll over, we got to get all the way back down here in just to back test this big chunk of value. So, for me, I think it would be better to wait for some notable retracement. Like let some of these poor location buyers, or relatively poor location buyers relative to anybody who's in here or even in here, let them get shaken out a bit and then see where the market kind of bottoms out, and then we can look for those balance plays again within the range, right? Kind of like here, right? So back here, you have this major breakout, right? Major breakout. You fail to come back and negate it. You hook back on where? Pretty much here, right? On the lows of this structure that you tried to leave. So we can look for something like that, right? Like ideally you get a situation where it's like this. You're like blah, 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 and then earnest attempt, fail to get down there, or drop and pop, and then big old rip up, and then we can bottom fish using these lows. Kind of like what we were talking about with the dollar just now. Similar concept. All right, so that's it. Tons of space for a weekly higher low. Anything over 3311.560. This is the CFD Owanda chart. CFD on Owanda. That's pretty much it, my friends. Moving on to NVDA. So for NVDA, okay, I guess I got a lot of these that are marked wrong. It's kind of bothering me here. All right, so this should be updated. This should be all the way down here. So now we have this little local daily demand zone, and this breakout over the demand zone 172.38 rather is not negated without acceptance back under 172.38. Lots of space for a daily higher low. I don't care about this stinky one. I would say anything over 164.07 will be good for one. All of this is just balance. This is fine. Healthy consolidation right now. Did this not get it to a 9 yet? It did not. Um, Super healthy consolidation. I wouldn't be too. I'm not terribly interested in being a seller. I didn't even do any cover calls yet, just because it just looks quite healthy. So we shall see. I think if we were to fall under 173.45, then I would be like, ideally we get a situation like this for covered calls, like drill under it, then bounce back up here to get it extended. I was thinking about it, but then this gap up and held there. I don't know, just not really too interested in it. Bigger picture, I'm still looking forward down here. I would prefer to look for a back test of this big chunk of value. Might take some time to get down there, just like this big old rip here. Very healthy consolidation, took some time, but eventually you do retest it. You get it twice here. It's a very similar situation, right? Like this looks very similar to this right now, right? Big range expansion after a bunch of balance, big range expansion, just waiting for those back tests here, you know? So that's it for an NVDA. Moving on to Bitcoin. So Bitcoin, again, like I was saying, still stand by these trade zones. Mark this up as a very reasonable place to book some partial profits. If you wish, I would walk my stop up to no later than here. But at this point, because you do have this local daily demand zone that's being affirmed as long as you're holding over 113390, I think it's reasonable to have your stop under here, 109321. That's fine as well. If you've taken profits, if you chop it up here at the value area low of this all-time high supply, it's more reasonable to leave your stop under here. But if you haven't taken any profits, I would just kind of walk this up on each new daily demand zone that gets created and affirmed. All right, so that's pretty much it. Lots of space for a daily higher low. Anything over 109993 is going to be good for that daily higher low. And again, we care primarily about 113390. Just see if there's a TD print higher. It did not. That's it. Moving on to Ethereum here. So for Ethereum, did not come into the trade zone. This is quite notable, right? So the sellers here, they should be trying to negate this breakout by getting under 3941.86. And coming back down to this fella here, which was problematic for these buyers here, here, and here, and here. And so an inability to do so is notable, right? The buyers look okay here. As of right now, lots of space for a daily higher low. Anything over 4237.13 will be good for one. That's pretty much it, right? Pop and drop at the value area high, trying to hold this point of control. Pretty much held it to the tick as of right now. So now the objective should be to keep holding over 4605.77 and find acceptance over 4748.87 in order to move value higher relative to the all-time high supply, right? That's the goal right now for these buyers. And they look positioned well to do so. I still stand by this, honestly. Like, if it doesn't hit, it doesn't hit. But I still would prefer this trade zone. Let's moving on to CCJ. Okay, so CCJ, very healthy consolidation, just trading sideways. No real update, right? Because nothing really happened last week. Sure, it was an advance, but by a smidge. This higher high lacking follow through still has me thinking, there's decent potential that we coming back test this guy. This is also one of those names where it trades sideways a lot, it chops around a lot. So you see big range expansion, you see healthy sideways consolidation. It might make you feel like you want to jump in on this, and I'm not saying that's necessarily wrong, right? I would say I'm a fairly conservative person when it comes to trade location. I would much rather miss, than take damage. Just knowing how I am, my disposition, I just prefer to preserve my psychology, because I'm a frail flower, little pansy, according to the futures room. So, that's really, I would prefer it over here, so yeah. So that's really it. No real change to CCJ. Weekly time frame, kind of choppy. So this essentially will be for a monthly higher low. All right. Okay, so moving on to trade review. There's honestly a lot of comments, but not. There's a lot of good lessons, I think. I spent most of the week being kind of frustrated, honestly. So definitely have some thoughts on that. But it's always good, right? Like challenging weeks. They test you, right? And then also usually when you're tested, that's when like the most learnings occur, right? So I was definitely noticing some like psychological stuff going on with me. I got a bad like news from the doctor, a little health scare. It's not. I don't think it's a big deal. I'm not really sure. I'm not used to having not good blood work. So, and I exercise a lot and eat fairly clean. So I was kind of surprised. That's kind of been on my mind weighing on me a little bit. I bought some life insurance. But um, anyway, I think that's kind of part of it, but I don't know. Either way, a little challenging, but good week, I would say. So, starting off on the 8th, right? We were over here, and remember, I'm thinking, okay, well, there is the potential that we're looking at another situation where we pop and drop, and we pop and dropped on Friday. So, if these sellers were going to affirm that drop, right, that pop and drop on Monday, this day, then they needed to hold back under here, right? Like we've already kind of discussed that. So I was just interested in selling that. And Mondays usually I take it easy. I had a lot of stuff around the house to do. Um, so yeah, I just took this one shot at it, and it was just a. And this is like this. I included this comment about like I wanted to kind of let the market show its hand a little bit, and instead of like trading right off of the open, because I was just expecting there to be the potential for further daily balance, and like I think I need to be more mindful of that, right? Because the mindset that put me in was like kind of a more lackadaisical mindset, like oh, like let the market show its hand a little bit, and then we'll come up with a plan like a little bit later in the session. But that's not ideal, right? Like even if I'm gonna think like that, I should still think through to like okay, but if we're gonna do something early, what should it be? Just keep all those options open. Like I often talk about, you kind of want to plan for up, down, sideways. It's the same idea, right? Like you want to plan the session for like aggressive, conservative, early, late, whatever. So I think that was like a poor management of my expectations. I had expectations, and like market doesn't care what my expectations are, right? So um that's just context. I don't know why I included that. RTOI initial rejection from all-time high, supply value low. This is just context. I'm not sure why I included this, to be honest with you. But I sold this, the ES 1 minute, looking for a deval test. So that was just oh man, did I mark it up? I don't even remember. I think so. I did. Oh, it's already okay. Where we at here? 9, 8. Here we go. It was pretty straightforward. SS, right? So 1 minute stair step up, pop and drop at the all time, not all time high, the high of the day. And at this point on the SPY, it looks like this, right? Like the first few candles on this day were over here, So I'm thinking, all right, we didn't even get up to there, to that daily breakout point, right? So I'm thinking, okay, well, if we're not going to come up to that daily breakout point over here, so we open up here, initially you fail to even get up here, I assume we're trying to come down here, right? That's my thinking. So, I figured extended target, we can just look to get to the next relevant high, right? This breakout point from the end of the day structure. Like if we're going to fail here at the open, or not get to that daily breakout point, I should say, and then roll back down under the open, the next objective should be to negate yesterday's end of the day structure. So I was looking for that, but that just didn't happen. So let's see. I figured, oh right, it was a potential lagger to NQ as well, I believe. Stop over the high of the day. I chopped it up, and then I said I should have been open to the RTY sell. So I'm already kind of noticing like a some errors, right? Because the RTY sell made a lot more sense in my opinion, right? Because looking back, it was over here. I love this kind of trade. If you've been watching these videos for a while, I really like when the open is right on a major daily level, because then if you can put your risk on and it's like super clear and it gets right to the daily no change level. So that would have been a much better trade that got to target, but I just failed to realize it. Again, part of that was because I was like, okay, well, let me wait a little bit into the session to let the market show its hand, when in reality the market actually offered you a really good open trade off the jump. So that's a bummer. And I think let me just make sure what the context was from a session perspective on the 8th. That was fine. Like it's not ideal, right? Like it would have been better for like over here, but this is quite reasonable as well, because you're pretty much at the low of this supply from the high of the prior day. you know um Anyway, so that was pretty much it. And then I just, I'm interested in taking cheap shots at aggressive sells, local ranges highs, just because I was like pretty net long. I don't really have a lot of hedges on. I have no hedges on really, except for cover calls. On cover calls, they're not really much of a hedge, right? So anyway, I missed the next chop, and I stopped it. I went to go eat and stuff, and so just mixed the next chop I was looking for was, like I said, that test over here. All right, and then for 9-9, the daily context looks like this. Looks like this on 9-9, right? So again, I'm thinking, all right, well, we're still struggling, right, at this all-time high supply. If these sellers are going to push the issue here, then they should look to defend the key levels, right, of that all-time high supply. So that's the context of it, and I see that we're testing, at this point, we're testing the point of control, right? So that's can you see this? Testing the daily point of control, and that was pretty much right off of the open, so right here. And then it was an initial rejection from yesterday's value area high, right? So that's the here. Oops. On the 10th, right? That's, no, over here on the 9th. Initial rejection from yesterday's value area high, right? So what's happening here, right? What's happening is that if we reject from yesterday's value area high and the supply at the high of the prior day, then that's also affirming this rejection from this daily point of control, right? So I'm thinking, all right, let me try the sell. So I sold the NQ against the open, looking for the 81975. That must be a typo. I didn't notice. Hang on a second here. What the hell is that? Hold on a second. Wait a second. I'm on the wrong day. Okay, that makes sense now. Maybe. Oh man, it's not marked up? Hang on. Did I not do my homework? Oh, I did. Okay. Oh, okay, 81975. Okay, it's missing a decimal point there. Or like, yeah, this was an error. This was not I'm not terribly proud of this trade. So that was at 940. I sold this against the open for here. And the reason why I picked this location was I kind of chased it. You know, like I should have been prepared to sell against the value area high on the 9th because again the context is right here. So if we're gonna fail yesterday's value area high, again, that affirms the rejection from this point of control. So I wasn't prepared because again, I'm like thinking to myself, I'm gonna let the market kind of, shake out a little bit first before trying anything. Oops, hang on a second here. So because my location was bad, it was against the open here. It was still 1.5 R, right? I gave a little bit of wiggle room, but because the location was poor, my stop was not good, right? Like this opening rate, and I talked about this, right? Like I think, or no, I think I stopped it out. I talked about it after I stopped through it. Okay, yeah, I talked about it. So this is not good location, right? Because this is all still just chopping around, balancing, right? So really the better location would have been to top fish against the highs of this range, right? Because you have better R here. You know what I'm saying? Like if this, me stopping out here, the trade could have still worked, and it does still work to at least to the next target. Oh, actually, it would have worked quite well. But because of my poor location, I have my stop at a not great place. So there were some adjustments that I could have made. Like I could have played for a further target. Like I could have played for the point of control like this, right? Played to get to here and have my stop over the high. Something like that would have been more appropriate. Or what else did I say? Needs to be better about looking forward, even if I want the market to shake out a bit. And I pansied again. So at 952, I pansied out again. I was just kind of getting in my head, I think, right? Because these diva setups are the same setup pretty much, right? If these buyers can't find acceptance over the diva, this is not a lot of risk, right? Like if you sell against this developing value area high with your stop over the high of the day, trying to get back down to that level of change, that's 2.6 R. Just getting back down to the D val is 1.7 R. I should have been prepared for that, but I think I was just in my head, like I didn't like the idea that I fired off that bad location there. I needed that trade to work right there. Otherwise, then it's, I guess, stopped out, right? So again, this location is no good because this is all just still consolidation, still indecision, chopping around the open. So, and I'm just pointing that out, again, like the more challenging sessions, usually there's more to learn from, right? And I had to be open to the reload, right? Because if I'm going to take that poor location, I know then that has to work right there. If it does, to keep my risk tight with 1.5 R, and if it doesn't, then I need to be prepared for the reload because the idea might still work. you know, so it just wasn't really firing on all cylinders, and just bringing some attention to that. And then on 910, I'm still thinking, let's see, the 10th, the daily context is this. So we open and we roll over right away. So you break to a new high and roll over. So again, I'm still thinking, all right, there's, you know, the buyer's still having some problems. Maybe I'll still try to join the sellers here. So I sold the NQ Depop Pass, and that was at here. And this is honestly kind of a similar situation, although this day, it's kind of a similar situation, right? Where the location was really not great. But it's a little bit different. Either way, I sold this Depop Pass because I'm thinking, all right, well, you know, typically you want to go with gaps that don't fill right away, but if they start filling, they, you know, usually they get filled. So they were trying to fill this gap, and my objective that I was targeting, I wasn't targeting the gap fill first. I was targeting the September 5th high, right? So I was looking for a back test of this guy first, and on the ETF chart, you get there. On the ETF chart, you get there on the first move. Wait. Hang on a second. No, I'm sorry, on the futures chart. Wait a second. Oh yeah, on the futures chart, you get there on the first move. But on the ETF chart, you did not. And so that was an error because I should have been playing off of the highest level, you know? So hold on, let me just mark up the September 5th level. It's over here, right? So here's the September 5th level, and I failed to realize that there was a discrepancy there, right? So again, the ETF, I was looking at it on the ETF chart because normally I like using the daily time frame. I look at the ETF chart. So I was just looking at it over here, and so I based the exit off of that. And so I was looking for it a little bit deeper on the futures chart. I was looking for it at 898 just for a meme exit. And that also violates the round number guideline, right? Like typically just human psychology, people put their orders on round numbers, zeros and fives. So, you know, that was just not ideal, right? I should have been aware of the discrepancy in the levels, and I should have been playing for the higher target. Whenever there's discrepancy, I prefer to play at that higher target, or the closer target, I should say. And I wasn't mindful of the round number guidelines. So that was problematic. I mentioned that. Let's see. Took off at deval. Yeah, so I took off. I was originally just looking for a test of yesterday's regular trading hours high, but I didn't love the locations, and you know there was already decent art just to get to the low of the day essentially. So I just chopped it up, and then I missed that second exit because of the error. I missed it by a couple of ticks. It's kind of frustrating. A couple points, kind of frustrating, but it's all good. And just all of these comments are just bringing attention to that. And also I should have been open to the ES buy, because it was a potential incomplete fill. So on the ES at that point on the 10th, the 10th, I was thinking about these deval plays. Like these deval plays made sense. You don't see follow through on it later on, but even this deval play here was dirt cheap. This one was super cheap, and this one was super cheap. Just playing to get to the high of the day or even to the diva, right? Like playing on this pass back over on the same day, like that is still 1.5 R. Playing this one, man, like even with your low here, it's still 1.7 R. So yeah, it's just again, and that's an error that, you know, if you've watched these videos, this is something that's a common error of mine where I just kind of end up watching the work. Whatever trade is on, oftentimes I forget that there's a potential to put on a trade going the other way. Like if I don't have high conviction on this trade, I think it's reasonable to go both ways. I oftentimes lose sight of the other direction once I put the first trade on. So basically, I failed to do a good pairs trade in my opinion here. So that was it. And this is good. So this is kind of where I start turning the ship around. So at the end of the day, I talk about that the gaps filled and the daily breakouts were being negated, right? So again, that's these days, right? So the gaps were filled, daily breakouts being negated. But so on the SPY over here, right? But we should be open. So that's this gap update, right? Gap up, gap is filled, daily breakout over this guy's being negated. But we should still be open to the potential that buyers can take over. So, right, if lack of acceptance under YPOX tomorrow, so today's point of controls tomorrow, I should say, would be just consolidation of the daily breakout, right? So if the next day, if on this day, we can just hold over this day's point of control, then that's fine, right? We're just consolidating this breakout. So that kind of sets the context into my, probably I would consider the only good trade. All those other trades were fine. They were base hits, but, you know, nothing to write home about, but this was a good day. So 9/11, again, because the context yesterday was, you can just look at it, right? From a session to session perspective, it was fine, right? Like this looks bad. You have a whole day of seller control for the most part, but it's still a clean break of value higher. The majority of the session was over the prior session, and so value still moved higher. So we had to be open to the potential for buyers to step back in on the 11th, and that's what they did. So on the 11th, first I'm kind of beating myself up again because I hesitated on RTY. RTY was a really cheap setup over here. It was a pop and drop, a drop and pop at the prior session's point of control, dirt cheap just to get to the value area high of the session, but that's okay. Few moments later, 6 minutes later or so, I just bought the 8 minutes later, I bought the pass back over yesterday's value area high, and this one really, it made me wait for a long time. And again, I was like kind of in my head, and I mentioned it like, here we go, here's the setup on the 11th, and I just bought this pass. This pass over here. No, it was on the 40. Yeah, so I bought this pass over the value area high, kind of filled a little bit above it, and it almost took me out, which honestly, the week would be so different if they did take me out, and I probably would be, this review would probably be much more somber. I don't know. I would not have enjoyed it as much. I mean, whatever, no big deal. But like, either way, we missed getting that stop out. It was a pretty much 1.5 R to get back to the regular trading hours high chop. So it made me wait a long time. I put it on, and then it makes me wait. So I mentioned here at 9:46 that like I'm definitely in my head because it's over here. Honestly, it wasn't that long, so hang on. When did I say that? Blah blah blah. In my head for sure. That's at 9:46. So here, I'm like, I just had an urge to chop it up at the open, which would be like nonsensical, right? The R for that would make no sense. Half R, half a point R, it makes no sense. So I just bring it up, right? Because I think it's important, to just call it out, right? Like when it just exists in your mind, it can have infinite power, like when you like anxiety or fear or greed or whatever, anger, whatever, any feeling that you have that's really intense, and you just kind of let it exist in your brain, it's in your body, it's having its way with you essentially, right? It has access to essentially all of your energy, right? But when you just kind of make it tangible, like you write it down, you say it out loud or whatever, and then you can kind of step away from it a little bit, create some space between this sentiment, you and this sentiment, and then it's easier for you to critique it and kind of catch yourself in the moment. So like I find it very helpful. It's very similar to like point and call. Like pointing and calling is a procedure that that's very popular in Japan apparently, where like if like train conductors and train operators, every single step that they have to do to coordinate with each other, they say the thing that they're doing and then they point at it to like kind of let everyone know and let themselves know that they did the job, and like, and that the train is ready to go, and they have like a super low incident rate apparently. So anyway, I like to practice that, right? Just calling it out loud. Next time, try yourself. Next time you're angry, just be like, "Oh, I feel angry at this," and all of a sudden, it kind of subsides a little bit. Or if you're scared, so I feel scared about this, and then it kind of subsides a little bit. Not me. I'm never scared. Just kidding. I'm just kidding. The ocean terrifies me, and my wife. Anyway, so yeah, so finally it gives me the chop at 9:48, makes me wait like 10 minutes to get to that first chop, and then I take more off. Just we're in blue sky, so at this point I don't really have a targeting. I'm just based it off of R, so I chop it up at 3R, and then I'm walking my stop up or trying to get to the daily R2. The daily R2 is marked up over here, so I get that third chop much later in the session, and then after that third chop I exit everything. Yeah, after that third chop I triggered out while I was eating. And then I said there's potentially a Deepak play later in the session, right? Because this is potentially a trending day. And if it's going to be a trending day, then very often in the middle of the session for like 15-minute high or low, a failure to hold under the Deepak is a good place to look for a potential higher low. It doesn't work all the time. No setup's going to work all the time. But that's what I was looking for in the middle of the session. And so at 11:50, that does set up right here. 11:50, okay, just buy this, move back over the Deepak here. and chop it up at the 88 just for the meme exit, but also because it's this prior low over here, right? This is kind of the all-time high supply, really, right? Because we're in blue sky breakout. This is just the local supply sitting at the high of the day. So I figure if these buyers are going to have problems, it should probably be here. And you do pause here, back test it, and then carry on. I chopped up more at the development value area high. Oh, I missed that, but I did chop up more at the development value area high, and then at the end of the day, I just closed it out because it just wasn't doing anything. So at like right before the close, somewhere in what is that, 57, somewhere in here, yeah, somewhere, oh, at the diva, I just exited the rest, and that, that was a solid trade. So kind of eked one out there at the buzzer. I mean, there's still a Friday session, but I didn't do anything on. I'm sorry, 57. That was on this day. It was over here. I didn't do anything Friday, so there was nice setup, but I was streaming, so I'm super distracted, and like it is what it is. I don't try to get too busy when live streaming because well, one time I made a very costly mistake while being distracted. So I just try to be a bit more cautious, and that's really it, my friends. So yeah, so if you are interested in joining our chat room, me, Dan, Funk, the whole team, we do this kind of thing all the time where we just specifically call out exactly what we're doing in the moment, not so that you can copy trade per se, right? Just so that you can kind of reverse engineer the process. It's a really great place to learn the ropes. I think very healthy environment. Everyone's super supportive. We have a lot of fun, just like even if it's slow, just talk about stuff or whatever. So if you're interested in that, check out our community, links in the description below. And if you want trade zones sent to your inbox every single week, 2 novel ideas, update from me, update from Dan, any trade that I take, I do the play-by-play. These days I'll preemptively call out before I even initiate something, which gives people the opportunity to front run me. Then check out the swing report, links in the description below as well. And if you wouldn't mind hitting us with a like and subscribe, we would appreciate that very much. Helps us out a lot, costs you nothing. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.